Welcome to the deep dive. We're plunging into the crypto market again, and wow, things shift fast, don't they? Always keeping us on our toes.
They certainly do.
Today, we're looking at something really striking, a big reversal in crypto ETF flows. Just recently, Bitcoin ETFs, well, they've started pulling in serious money again, while Ethereum ETFs, they're seeing funds head for the door. It's quite the flip.
It really is.
So our mission for this deep dive is to unpack this rebalancing act we're seeing from institutional investors. We want to look at the short-term dynamics, what's pushing Bitcoin forward right now,
Right.
and compare that against Ethereum's longer-term picture, which still looks pretty compelling to many. And crucially, tie it all back to the bigger macro forces. We've got sources lined up, The Block, Cointelegraph, Yahoo Finance, CoinDesk, the works. Ready to dig in?
Absolutely. And what's really interesting here is how clear the data is, especially from Tuesday, September 3rd. It really does highlight what people are calling a rotational shift. This isn't just, a little market wobble. It feels like a significant move by institutional money. And it poses a big question for you listening. Is this just temporary, like a quick rebalance?
Or something more fundamental, a shift in leadership, maybe just for now?
Exactly. That's the key question we need to explore.
And when we say significant, let's put some numbers on it from Tuesday. Spot Bitcoin ETFs. They pulled in a net $332.7 million. That's a pretty strong signal.
It is a strong number, yeah.
Suggests Bitcoin might be, roaring back into the spotlight. Fidelity's FBTC, they led the way, pulling in $132.7 million just on their own.
Big chunk of it.
And BlackRock's IBIT wasn't lagging too far behind, $72.8 million for them. Plus, you had Grayscale, ARK21 shares, Bitwise, Vanek, Invesco, all positive.
So pretty widespread inflows for Bitcoin.
Exactly. And you hear some analysts looking at this already saying, maybe this is it, maybe this pauses or even ends Ethereum's recent run of dominance.
Okay, those Bitcoin numbers, they definitely grab your attention.
Yeah.
But look, to really get what's happening, we have to look back to it. We need that context.
Right. August.
Exactly. Just rewind 1 month to August. That was, unequivocally Ethereum's month. Ethereum ETFs just crushed it compared to Bitcoin ETFs then.
How much are we talking?
We're talking a massive $3.87 billion in inflows for Ethereum ETFs in August. While Bitcoin ETFs, ironically, actually lost $751 million over the same period.
Wow. Okay, so that context is crucial. This current dip for Ethereum follows a really, really strong month.
Precisely. It sets the stage for this reversal. Now, just to complete that picture for September 3rd, while Bitcoin was surging, Ethereum ETFs did see that downturn. $135.3 million in net outflows on that Tuesday.
Okay.
Fidelity's EP, which did so well in August, it shed $99.2 million.
Yeah.
Bitwise's ETHW lost about $24 million. It wasn't just Tuesday. They saw $164 million walk out the previous Friday, too.
So a couple of down days there for ETFs.
Yeah. And remember, this is right after August when ETH hit a new all-time high. What was it? $4,953.
Just shy of 5,000, yeah.
And we saw more companies putting ETH on their balance sheets, too. By the end of August, 71 companies had disclosed almost $120 billion in ETH holdings combined. It just shows how quickly sentiment can swing,
It really does. A massive shift in just weeks. So, okay, we see the what pretty clearly, but the why.
Yeah.
That's always the interesting part, isn't it? What's driving this rotation back to Bitcoin now, especially after ETH had such a moment?
Well, analysts are pointing to a few things.
Like what? I saw Vincent Liu from Kronos Research had some thoughts. He was talking about the digital gold narrative.
Exactly. Liu suggests that narrative for Bitcoin is really gaining traction again. He pointed out that traditional gold itself is hitting all-time highs.
Right.
And that tends to strengthen the appetite for, hard assets, things perceived as tangible stores of value.
So a classic flight to safety kind of move, Bitcoin as the safe haven in crypto.
That seems to be Liu's take. He sees investors leaning towards Bitcoin because it feels more stable, especially with all this, quote, macro uncertainty floating around. And he thinks if the global markets stay choppy, well, this trend favoring Bitcoin could easily continue.
That makes sense. And doesn't this also kind of fit with historical trends? I remember reading September isn't always Ethereum's best month.
That's another interesting angle. Yeah, historically, September sometimes sees weaker seasonal flows for ETH. Maybe lower risk appetite from investors as they come back from summer, look towards year end.
And Bitcoin tends to benefit from that risk-off mood.
It often seems to. We saw something similar last year, September 2024. ETH ETFs had outflows then too, while Bitcoin ETFs actually pulled in $1.26 billion. So there might be a seasonal pattern here.
Interesting. And it's not just seasons, right? You mentioned the macro picture. Central banks are sounding cautious.
Definitely. You've got global central banks maybe signaling worries about inflation sticking around or hinting at rate hikes or just generally being cautious. Bond yields are holding up.
So investors get nervous.
Exactly. And in that environment, some investors might decide to trim what they see as the maybe slightly higher risk Ethereum exposure.
And shift back into Bitcoin, viewing it as the more stable digital reserve asset for turbulent times.
That seems to be the play right now for some.
Which really brings the question to you, listening. How much do these short-term macro wins actually sway your long-term thinking on crypto? It's a tough balance.
It is. And those short-term dynamics, the macro stuff, it's definitely happening. But, let's connect this back to the bigger picture. We absolutely have to talk about Ethereum's long-term value.
Okay, so the counter argument.
Right. Mick Ruck from LVRG Research put it quite well, I thought. He suggested that, maybe institutions are rebalancing towards Bitcoin now for stability.
But they haven't given up on Ethereum long-term.
Exactly. He thinks they still maintain a bullish outlook on ETH for its fundamental potential. It's a more nuanced view, right? Acknowledging both the short and the long game.
So what are those long-term drivers for Ethereum then that kept people excited through August?
Well, think about what fueled that August surge. It wasn't just hype. It was things like its yield-generating potential, staking ETH to earn rewards.
Right, the staking yields are attractive.
Very. Plus the whole DeFi ecosystem built on Ethereum, which is huge and still growing. Then there's improving regulatory clarity, which helps institutions get comfortable.
And the corporate treasury adoption you mentioned earlier?
Yes, all of that. These are fundamental drivers. They're about utility and real economic activity, not just short-term sentiment shifts.
And is there evidence that long-term interest is still there, despite these recent ETF outflows?
Well, look at the staking queue. Even with these outflows, the amount of ETH waiting to be staked has surged. It's up to over 860,000 ETH now. That's about $3.7 billion.
Wow, okay, so people are still locking up their ETH long-term.
It suggests a deep, sustained interest in Ethereum's core function, its economic model. Long-term holders seem to be sticking with it, participating in the network, regardless of these shorter-term ETF flows.
So the argument is Bitcoin might be digital gold?
But Ethereum is still the engine, the backbone of DeFi and smart contracts. Its technology, its programmability, its utility, that's what makes it arguably a very compelling long-term investment, even if some funds are moving defensively right now.
That's a clear distinction, utility versus store of value primarily. But, you hear talk sometimes about Ethereum also becoming a store of value, especially with things like the fee burning, making it potentially deflationary. Does that complicate the picture?
It adds another layer, for sure. There's definitely a narrative building around ETH's potential sound money characteristics.
Yeah.
But its core innovation, its main differentiator, is still that programmability, that world computer aspect.
Okay. And what about the risks? You mentioned those attractive staking yields. Are they risk-free?
That's a really critical point to bring up. No, absolutely not risk-free. Joseph Chalom, he's co-CEO at Sharplane Gaming, gave a pretty stark warning about this.
What did he say?
He cautioned that companies just piling into Ether purely to chase those extra yield points could be walking into a minefield of risks.
Like what kind of risks?
Well, the classics. Credit risk, what if the entity you lend to defaults? Counterparty risk, what if the platform and protocol you're using fails? Duration risk, how changing interest rates impact the value. And of course, smart contract risk bugs or vulnerabilities in the code itself.
So chasing double-digit yields isn't a free lunch.
Far from it. Chalom basically said there will always be people chasing that last 100 basis points of yield. That's just 1% for anyone not swimming in finance terms thinking it's easy money.
But it rarely is, especially in volatile markets.
Exactly. And his bigger worry was that firms may be feeling behind the curve, might make reckless moves trying to catch up, potentially tainting the whole sector if things go wrong.
That raises a really important question for you listening. How do you weigh that potential yield against those very real inherent risks? Especially in a market that can turn on a dime, it's about prudence, isn't it?
Prudence is key. Even as the space matures and institutions get involved, you can't ignore the underlying risks.
A powerful warning indeed. And just quickly, the immediate market reaction on Tuesday to this ETF news. Bitcoin nudged up about 0.5%. to around $110,943. Ethereum slipped about 1% down to $4,327. Small moves, maybe, but they sort of reflect that sentiment shift we've been discussing.
They do. A slight edge to Bitcoin on the day the flow data came out.
So, wrapping up this deep dive, we're really left with the central tension, aren't we? Is this September shift back to Bitcoin just the start of something bigger, a sustained rotation driven by macro fears?
Yeah.
Or is it just a short-term thing? Institutions taking some profit after Ethereum's amazing August, parking funds in Bitcoin for a bit while the dust settles. It really feels like trying to forecast the weather sometimes.
It can feel like that.
Yeah.
But maybe the real insight here isn't about picking a winner, Bitcoin versus Ethereum. Maybe it's about seeing how institutional players are now actively using these different assets.
Dynamically rebalancing between them.
Exactly. They're treating them as distinct tools in a portfolio, shifting based on market conditions. That kind of sophisticated rotation just wasn't happening at this scale a few years ago.
Yeah.
It shows the market is maturing.
Right. Both have their roles. Bitcoin as digital gold, maybe the defensive play. Ethereum as the engine of DeFi and innovation, maybe the growth play.
And they appeal under different circumstances, fitting different parts of a strategy. This internal market logic, how capital flows between them based on perceived risk and opportunity, that's really fascinating to watch.
It absolutely is. So that leaves a final thought for you, our listener, to chew on. As this institutional wave continues to flow into crypto, how will the mix of macro pressures, central banks, inflation, yields, and the unique strengths of both Bitcoin and Ethereum keep shaping investment strategies? What really stands out to you about how investors seem to be weighing that age-old balance between stability and innovation in this wild, dynamic market?